Good morning. Kevin Cochran here with Hunter Street Investment Advisors, right in downtown Apex. And here at Hunter Street, we have fiduciary advisors, and we are in the business of helping our clients who are individuals and business owners um, solve that complex puzzle, which is retirement today. Because retiring today requires, especially in this environment with really low interest rates, it requires growing and managing your investments over an extremely long period. It could be 20 or 30 years for your retirement, and that's challenging. The way we do that is with a customized financial plan. So financial planning is essential, and every client has a personalized financial plan that is specific to their timelines and their financial goals. But in addition to that, we're really focused on tax efficient investing. We've got alternative investments, one of which we're going to discuss today, which is the real estate IRA. And we also do income planning, detailed income planning for that retirement period, Social Security maximization strategies, Medicare planning, long-term care planning, and estate planning. So very comprehensive offering here, and all of that on the Charles Schwab platform. But today what we want to talk about is the real estate IRA. And it is exactly what it sounds like it is. And that is an IRA account in which you can own actual physical real estate. So before we get into that, let's spend just a few minutes talking about why would anyone want to own real estate as an investment. And I can tell you, prior to getting into this business 8 years ago, back in 2012, I was in the real estate development business and investing. And we invested and built in apartments in the Triangle here, and I did that for about 7 years. So I have a pretty good experience with real estate investors and what they're looking for. And one of the main things that that our investors are looking for with their real estate is diversification, right? Many or most have portfolios that are filled with stocks and bonds and ETFs and mutual funds. And they're looking for something that is a little bit different. And so when we have a year like we had in 2020, where the market crashed due to the coronavirus pandemic and all of those investments were going down at the same time, real estate, especially single family rental homes in North Carolina, were very stable and growing. It's actually been it has been a boom in real estate in North Carolina in 2020. And so that diversification is really powerful reason that an attractive reason that people want to invest in real estate. There is no reason that the value of that single family home that you rent out should be going down in value just because the stock market and the bond market are all going down. Certainly there are times when that does happen, but usually it's to a much lower extent, especially in a state that grows like North Carolina. So diversification is big. Another one is it's a good source of income. Our retirees, they're really, now that that paycheck has stopped, they're really looking for a steady income stream through retirement. And real estate, in many cases, can be that. We'll look at an example here today where in the case study here in a minute where showing how you could earn a 6% return on the cash that you invest. So that's a really good income. The other thing is that it's a tangible physical asset. That single family rental home, I can drive by it. I can look at it. I can look at the neighborhood. I can see how the neighborhood is changing over time. How are the retail offerings and what do the other homes look like? What does the upkeep look like? What are the resale values? And I have a very solid understanding of how that physical asset is changing in value because I can look at it and touch it. And a lot of people really like that tangible physical aspect of their investment. And then probably the fourth thing I would say is you can have very long, slow, and steady growth. I'll tell you anecdotally that I personally have been a landlord here in the Triangle for 15 years, and I've seen about 2% growth in the value of that property over time. And I think that's true of a lot of the real estate in North Carolina. So that when you put a little bit of leverage on your investment, you can really get some amplified returns that are attractive. Okay, so with that in mind, the other thing is just relative to today's environment. You know, the stock market's at all-time highs. The interest rates are at really, really low point right now, and as those have been decreasing, bonds have gone up in value dramatically. And so there are some professional investors that think we could have a bubble in our stock and bond prices right now. The other thing is that the average income that we're getting off of our stocks on the S&P 500 is about 2%, and the average, the 10-year Treasury note right now is at 0.75%. So those are really low returns. And again, we'll look at a case study in a minute with some returns that far exceed that in real estate. So having said that, let's talk about what is the self-directed IRA. And I've told you it's a IRA account in which you can own physical real estate. So how you get there is you can convert existing funds that are in a traditional IRA or a SEP or simple IRA. Even that old 401k that you left behind can be transferred over into a new self-directed IRA. And I want to speak for a minute about the Roth IRA, because if you've got Roth IRA funds, or if it makes sense from a tax perspective for you to convert some old IRA into the Roth IRA, once you invest those in a self-directed IRA in real estate, all of those gains are then tax-free. And so that's a very powerful aspect of a self-directed IRA, is using that with your Roth funds. Okay, but as we just indicated there, this self-directed IRA is going to have the same tax treatment as your regular IRA and 401k, and that is deferral of all of the gains and all of the growth that you get in that account. Okay, so if you are in the business of fix and flips, when you make that capital gain, instead of paying capital gains tax on it this year, you keep that in your IRA, then you're going to get deferral of that tax. Okay, what kind of assets can you invest in with your self-directed IRA? It's a wide array of real estate and other options. So that single-family rental home, fix and flips, raw land, commercial buildings, private placements in LLCs, or even private lending. So, if you're the type that likes to participate financially in real estate investing and work with a business partner that provides more of the real estate expertise, you can still do private lending with your self-directed IRA. Now, of course, this is a specialty custodian. So we don't use our Charles Schwab brokerage for this, or Fidelity, or TD Ameritrade, wherever you may do your investing. It is a specialty custodian, and as part of the value that we're providing in this is identifying that custodian, managing that relationship, and helping you ensure that you manage it properly according to the regulations, so that you don't accidentally trigger a withdrawal or distribution from your IRA and mess up the tax benefits of that. Okay, so the process for a self-directed IRA is actually quite simple. We would get together and open up an account. That costs $50 to open up the account, and then we're just going to do some paperwork to transfer your funds from your old account, whether that's a traditional IRA or Roth IRA, into your new account at the new custodian. And once it's there, you're going to work with your real estate expert, your broker, to identify that property and go ahead and make the investment utilizing the cash that's in your IRA. And your annual costs of this program are going to be quite similar to what you would charge, what you would pay your investment advisor to manage your other IRAs or accounts like that. So you'll find that to be very reasonable, I think. And as we conclude, let's do a little case study. So let's pretend for a moment that you've worked with your real estate broker. You've identified a property on the MLS that you think would be a good investment property. and you utilize the funds in your IRA or your self-directed IRA to purchase the property. And let's say that the cost for that single family rental home is $120,000 all in, and that you can rent it for $1,000 a month. Okay. Of course, you're going to have some expenses for that property. You're going to still have property taxes. You're going to have hazard insurance. You're going to have possibly some homeowners association fees, maybe some pest control and other utilities. And assuming that runs 40% of your rental income, then your net cash flow is going to be $600 a month, which equates to a 6% cash on cash return on that $120,000 investment. So if you remember some of the yields that we talked about that you're getting off of S&P stocks and 10-year treasury bonds and corporate bonds, this is a far superior yield to many of those. And some would argue that there might be less risk as well. So there's a lot of very good reasons to do the real estate IRA. It's not as complicated as it might originally sound. You want to work with a financial advisor like one of us here at Hunter Street to make sure that everything gets handled properly. But just give us a call. Our number here is 919-427-0424. And you can find us on the internet quite easily. Hunter Street Investment Advisors, that's HSIadvisors.net. And we look forward to seeing you soon. Have a great day.